Good afternoon. This is James Perry at Perry Capital in Miami. It's Independence Day weekend. The S&P closed Thursday at an all-time high. That's 62.79. Stock market's doing well because the economy is doing well, because the political situation around the world and the domestic fiscal and monetary policy situation in Washington is getting better. We always say, look at the data, not the narrative, and look at reality and not the rumor. We also say, if you know what we own, you know what we think. I'm going to tell you what we own, why we're here, what it means, why you should care, and what you should do going forward into the second half of the year. The Perry Capital Asset Management main portfolio is designed to beat the S&P 500 every year with less risk. It has done so since inception, especially in down years where we underweight the stock market quite aggressively. Most other asset managers don't do that. We are overweight the stock market now, 70% allocation, largely in tech, some defense, some gold, Swiss francs as well. And the reason for that is that we see that the new administration is reversing some of the egregious and irresponsible spending and expansion of government that we have seen over the last 14 or 15 years. This is going to be very, very bullish for the economy, and the stock market and investors worldwide see it. We are getting lower taxes. We are getting more deregulation. We are reducing the budget deficit. We are reducing the trade deficit, and national security has been enhanced. Our Axis adversaries, particularly China, followed by Russia and Iran, are on their back feet a little bit here, and that's a good thing for peace in places like the Middle East. Hopefully in Ukraine, and hopefully a little calmer situation over in the Asia-Pacific area. We do believe that the Industrial Revolution, which is the AI revolution, is driving investment in this country. The amount of money that's come into this country in the last sort of 6 months has been in the tens of trillions, which is unprecedented. I think that will continue as the global trade structures that has been in place is dismantled to make it a fairer and safer global trading system for everybody on the planet. The US dollar is going to start doing better here. We're going to stabilize around these areas and probably start improving, especially against the euro and the yen, and also against the emerging markets led by Brazil, Russia, India, and China. Those four countries have serious theological and ideological issues that are holding back investment and growth. That will continue. And the fact is that most of the money in those four countries is leaving those countries because the people that are there don't trust their money with the governments that are running them. That will continue as well. I do think that that is an incentive for people to move toward peace a little bit. Let's hope we get something in the Middle East sometime soon. I think we will. That's very good for the U.S. economy and the Middle Eastern economy. And I think that if we can talk some sense into these guys over in Russia and China, they'll calm down a little bit and realize that they have a lot more to lose by being antagonistic than they have to gain. So we will see. U.S. economy, meanwhile, is doing very, very well, driven by the employment situation. Labor market's strong and growing and wages are increasing. The housing market is beginning to pick up a little bit. It's becoming a buyer's market, according to the New York Times again, largely because mortgage rates are down below 7% again, and wages are growing at 4.3%. So consumer spending continue to drive the U.S. economy and corporate profitability. I think that investors should be overweight the U.S. stock market, particularly in technology. And if you want to have a hedge on, think about gold and defense and Bitcoin. The structural shift in U.S. policy has been disruptive by design. I think that's a little bit hard for many international investors to understand because the economies are older, the political systems are a little bit more stable, and they don't like disruption. They like status quo. The status quo is being upended, not because we want to pick a fight with our allies, but really because we want to contain the Axis powers and we need our allies' help, but change is difficult. I would say to investors that have shorted the dollar, do not confuse a tactical shift in hedging with structural change. I think the value of the currencies of the yen and the euro in particular are probably a little bit expensive right now based on underlying facts in terms of monetary fiscal policy and growth capabilities. Perry Capital has a tremendous amount of supporting evidence that supports our strategy and forecasts. We don't give that out to everybody. We do like doing these videos. We get a lot of feedback on them and it helps us do our job. We are going to put a structure in place in terms of pricing on product levels. That will come to you shortly. In the meantime, enjoy the videos and recognize that you can call us and talk to us about all the supporting evidence that we have against all of these theories, strategies, forecasts, and allocations in our portfolio anytime you want. Okay? Thank you very much. Bye-bye.